Today we're going to trace one of the most critical data journeys in the world. Seriously. We're talking about how a physical barrel of crude oil, stuck deep underground, makes its way onto a multi-billion-dollar company's balance sheet as a precise, auditable number. It is a wild ride from the oil field to the financial ledger, so let's jump right in. So this is really the central question, isn't it? How does a single drop of oil become an auditable dollar in a financial report? It sounds simple on the surface, but getting it right is this incredibly complex dance between field sensors, really specialized software, and super tight financial controls. The answer is all about a process called hydrocarbon accounting, and trust me, getting it wrong has massive, massive consequences. And the stakes here, they couldn't be higher. One case study from Cognizant really laid it all out. Trying to do this stuff with manual data entry is just a recipe for disaster. Think about it. Every single keystroke is a chance for an error. It makes complying with strict regulations like Sarbanes-Oxley a nightmare, and you can literally lose revenue. The key thing here is that this isn't just some IT headache, it's a fundamental business risk. Okay, so to solve this problem, companies build what you can think of as a sophisticated digital pipeline. And that's what we're going to do now. We're going to follow the data through this entire architecture, starting with the raw measurements out in the field and following it all the way to the final financial posting in a system like SAP. Here's our roadmap for the journey. It all kicks off with measurement in the field. Then comes this absolutely critical step called allocation. After that, we figure out what it's all worth through valuation. And finally, it becomes an official financial record. So let's start at the very beginning, with measurement. The whole thing starts here, with systems called SCADA. The best way to think of these is as the nervous system of the entire oil field. You've got sensors on wells, on pipelines, constantly measuring flow, pressure, temperature, you name it. This raw, real-time data is the very first drop in the bucket for our entire accounting process. But right away, this raw data creates a huge problem. Right? How do you know which well produced what? Because out in the real world, the oil and gas from a whole bunch of different wells often get mixed together into a single pipeline. We call that commingled flow. So the meter at the end of that pipe, it tells you the total volume, sure, but it has no idea which well produced which specific barrel. And for accounting, well, that's everything. The solution to that puzzle is a process called production allocation. This is where specialized software comes in and does something pretty amazing. It takes that big commingled total and, using a bunch of data from well tests and theoretical models, it accurately assigns the production volumes back to the specific wells they came from. This is absolutely essential, not just for finance, but for understanding the health of the oil reservoir itself. And this slide just illustrates that core challenge perfectly. On one side, you have the field meter, which gives you one big number for a whole group of wells. But on the other side, the accounting department needs to know the precise individual contribution from each well. Why? Because each one could have different owners or different royalty deals. The allocation engine is the magic bridge between those two worlds. Okay, now I know this diagram looks a little complicated, but it really shows you the whole system in action. See on the left? That's the data coming in from the field. It flows into this central software platform. That's where the allocation magic happens. This is often handled by a big system like SAP's Production and Revenue Accounting, or PRA. And then finally, on the right, all that process data flows out to reports, dashboards, and the financial systems. This integrated platform is the engine that makes the whole thing auditable and reliable. So now that we know exactly how much volume came from each specific well, we've got to turn that volume into value. The system does this automatically. It applies these really complex, contract-specific pricing formulas. It also pulls in all the ownership data, who owns what percentage of that well, to calculate the gross revenue and figure out who gets paid. And here we are, the final destination. After all that measuring, allocating, and valuing, a journal entry is automatically created and posted to the company's main financial system, something like SAP FICO. This is the exact moment our physical barrel of oil officially becomes a number on the balance sheet, ready for financial reports and for billing partners. The journey is complete. So, we've designed this perfect digital pipeline. It's beautiful, but building it is only half the battle. How do you keep it running perfectly, 24/7, without a single hiccup? Well, that's where Application Management Services, or AMS, come in. And let me tell you, their role is absolutely critical. You have to understand, this system isn't just another piece of software, it is the financial heart of the entire production operation. If this thing goes down, or even worse, produces the wrong numbers, the impact is immediate and it is severe. And this is especially true during that high-pressure month-end financial close period, where there is literally zero room for error. This is where the AMS teams come in. They are the guardians of this system. They're on the job around the clock. They provide that crucial support during the financial close. They troubleshoot missing or bad data from the field. They also handle all the essential maintenance, from managing how new wells are configured in the system to constantly monitoring server performance and applying security patches with zero downtime. And maybe most importantly, they make sure every single change has a complete audit trail, which is an absolute must-have for compliance. You know, this quote from our source material really just hits the nail on the head. At its core, this whole thing is a massive integration problem. It's all about connecting the gritty, real-time world of field operations with the superstructured, highly controlled world of corporate finance. All right, so after all this complex tech, all this 24/7 support, what's the actual payoff? Why does all this accuracy and automation really matter to the bottom line? Well, this chart really tells the whole story, doesn't it? The old manual way is just full of risk. It leads to errors, it leads to revenue leakage. But a modern, automated hydrocarbon accounting system, it can achieve something that was pretty much unthinkable before: 100% accuracy in allocation and revenue reporting. A major producer in a case study actually achieved this. But what does 100% accuracy actually mean in dollars and cents? Well, it translates to this number: an extra 0.5%. That's right, an extra 0.5% of production margin. Now, I know that might not sound like a huge number, but in an industry where companies fight tooth and nail for every tiny fraction of a percent of profit, this is a massive, massive result. It just proves that investing in data accuracy isn't a cost. It's a direct path to being more profitable. So, if there's one big idea you take away from all this, let it be this one. The absolute best way to think about this entire process is as creating a digital twin of the oil and gas reservoir. Every single physical barrel that comes out of the ground becomes its own unique data object that has to be tracked, valued, and reported with perfect, high fidelity. It's the ultimate merger of the physical and the digital. And that really leaves us with a final thought to chew on. We've just seen how unbelievably critical this one data pipeline is for oil and gas. But as the entire energy system, we're talking renewables, the power grid, the whole shebang, gets more digital and interconnected, it just makes you wonder, what's the next critical system that we absolutely cannot afford to get wrong? Thanks for watching.